Welcome to Today Finance at Sketching Finance. I'm James, bringing you the latest market updates and expert analysis. Let's dive in. While everyone was staring at gold hitting $4,500, a silent giant just woke up. Silver hasn't just grown, it has exploded, surging 164% in a single year to $76 an ounce. If you think you missed the boat on gold, you need to realize that silver is currently the fastest moving train on Wall Street. Today, we aren't just talking about jewelry. We're talking about a massive structural shift in the global economy. From the solar farms of Nevada to the AI labs of Silver Valley, silver is becoming the most hunted metal on Earth. Let's dive into why this poor man's gold is making the rich even richer. Let's look at the scoreboard. Gold is up 72%. An incredible feat for any safe haven asset. But silver? It has nearly tripled that performance. In the world of finance, we call silver gold on steroids. Because its market cap is much smaller than gold's, when big money moves in, the price reaction is violent and spectacular. This performance gap of 164% versus 72% isn't an accident. It's a reflection of silver's dual identity. It acts as a shield against inflation like gold, but it also powers the industrial revolution like oil. This double-engine drive is what pushed it to that $76 record. To understand if silver is still a buy at $76, we look at the gold-to-silver ratio. Currently, at $4,500 gold and $76 silver, the ratio sits at roughly 59-1. Historically, this ratio has fluctuated wildly. But when it's high, it screams that silver is undervalued compared to its big brother. Wall Street hedge funds use this ratio to time their entries. When gold becomes too expensive for the average American, they rotate their capital into silver. If the ratio narrows further toward the historical average of 40-1, $76 might just be the starting line for a much larger run. The biggest hidden buyer of silver isn't a bank, it's the sun. The U.S. transition to green energy is hungry for silver. Every single solar panel requires about 20 grams of this precious metal. As America builds massive solar farms to power our grid, millions of ounces of silver are being bolted to the ground, never to return to the market. Unlike gold, which is mostly stored in vaults, silver is consumed. Once it's in a solar panel or an electric vehicle battery, it is rarely recycled because the cost of recovery is too high. We are literally burning through the global silver supply to keep our lights on, creating a massive vacuum in the market. If you're finding value in this video, please consider subscribing. It helps me create more content like this for you. But wait, there's more. The AI revolution is made of silver. In the data centers of Silicon Valley, high-performance chips and cooling systems require the world's best conductor, and that is silver. As NVIDIA and Microsoft build out the brains of the future, they are locking in massive amounts of silver for their digital infrastructure. Silver has the highest electrical conductivity of any element. In the race for AI dominance, speed is everything, and silver provides that speed. This industrial demand now accounts for over 50% of total global silver use, making the price less about feelings and more about necessity. Here is the scary part. We are running out. According to the Wall Street Journal, the world is in its fourth consecutive year of a silver supply deficit. We are consuming more silver than we are digging out of the ground. Mines are aging, and the discovery of new high-grade silver veins is becoming rarer and more expensive. In a deficit market, the price must rise until demand drops. But as we saw, AI and solar demand aren't going anywhere. This inelastic demand means that buyers will keep paying higher prices because they have no choice. This is the fundamental pillar supporting that $76 price tag. Smart investors aren't just buying the metal, they are buying the miners. Look at Core Mining and Hochschild Mining. Their stock prices have more than doubled. Why? Because of operating leverage. When the price of silver rises, the profit margins of these companies expand exponentially. If a miner's cost to dig silver is $20, at $30 silver, they make $10. but at $76 silver, they make $56. That is a 500% increase in profit from a 150% increase in silver price. This is why mining stocks are the ultimate wealth multipliers in this supercycle. We can't forget the Reddit effect. Communities like Wall Street Silver have mobilized thousands of retail investors to buy physical silver, creating a short squeeze on the big banks. These investors are tired of paper contracts and want the real thing, forcing bullion banks to scramble for physical metal. This isn't just a trade, it's a movement. By pulling physical silver off the market, retail investors are breaking the artificial price suppression that has held silver back for decades. This Main Street versus Wall Street battle is a major reason why the price shot past $50 and didn't look back. Financial experts at major institutions are shifting their tone. They now view silver as an essential hedge against currency debasement. Central banks, while traditionally gold buyers, are watching the silver market closely as a signal for industrial health and inflation expectations. The consensus among elite analysts is that we are in a commodity supercycle. With global tensions rising and paper currencies losing purchasing power, owning real money that has industrial utility is the ultimate defensive play for any American portfolio. Is it too late? Not necessarily, but you must be smart. $80 and $100 are major psychological resistance levels. We should expect volatility. Prices don't go up in a straight line forever. A sophisticated investor looks for the entry points during minor pullbacks. Don't chase the green candles. Use dollar-cost averaging. Build your position slowly and keep an eye on the supply-demand balance. The silver earthquake is here, and it's redrawing the lines of wealth. Subscribe to stay ahead of the next market shift and master your financial future.